folks, there is no stock safe at this point in time. It doesn't matter what your business model is. It doesn't matter how much success you had in the past. It doesn't matter what your past numbers are. It doesn't matter your management team. There's no stock safe anymore at this point in time. I have some shocking things to show you in this video. Google, Microsoft. People are looking at those and like, how were those down so massively? And yet the market held up decent, at least in terms of the Dow and S&P 500. I'll show you exactly why that's transpiring right now. Other people are looking at some of these stocks and saying, okay, a company misses by $1 billion, let's say, on revenue. Why does their market capitalization fall 100x that, right? And their market cap falls $100 billion plus dollars. I'm going to explain that in this video. We've got to talk about the dumpster fire of earnings that Meta just put up. It was awful, okay? And I'm going to show you the numbers behind that, and we'll talk about that and where to go with Meta stock kind of moving forward and my views on that, okay? So this is an extremely busy video. I got it's just a busy video. Hope you guys enjoy it. A lot to talk about and discuss in today's video. Moomoo for this month has a deal basically where you sign up for an account with the pinned comment down there and you get up to 15 free stocks valued up to $2,000, and they're celebrating their 10th anniversary. So if you want to check that out and take advantage of that deal before it ends, that will be pinned comment down there, okay? So Google McDougal, right off the bat. This stock was down almost 10% today. It lost over $100 billion of market cap here today. An absolute incredible move for Google. Now you might say, this has got to be a little ridiculous, right? Over $100 billion of market cap lost. Does Google really deserve that? And usually I would say no. But Google's earnings were awful. Plain and simple, awful, okay? Revenue was up 6%. Right off the bat, that's a very disappointing number in itself, right? But that's the tame part, okay? Operating income was down 22% year over year. 22% down operating income. Even worse, net income was down 36%. You got to be flipping my flapjack straight on the floor, okay? That is awful. So even myself, right? And Google's a stock I just started buying very recently because it's down so much. I'm kind of like, how much more pain could really be in Google McDougal? Like the stock was down 30+%. And I've been looking at this one and I'm like, I got to start buying some shares, okay? I didn't buy shares today. The reason I didn't buy shares today is that was such a disastrous earnings period that even I'm confused at this point on what Google's earnings will be over the next 12 months, to be quite honest. When you come in and report that disastrous of an earnings and you have net income down 36%, it starts to get very confusing about like where are your numbers at a year from now, 6 months from now, and what is the real forward P I'm paying for the stock right now? I'm even confused at this point in time because you can't come in and report net income down 36%. This isn't some small cap penny stock or something like that. Their net income and losses move all around and in margins. This is one of the most established, biggest companies in the world. Comes in and reports net income down 36%. Okay. Mr. Softy, Microsoft, down 7.7% here today. The stock lost over $100 billion of market cap here today. Approaching a $200 billion loss, like absolutely incredible, right? In regards to Microsoft here today, okay? Revenues are up 10%, so that's good. Good for Microsoft, right? Operating income was up 6%, so that's even starting to get a little troubling with Mr. Softy where, oh boy, okay, your operating income is up less of a percent than actual revenues are up. All right, that's a little concerning. Net income down 17%. Now, to be fair, they had a provision for income taxes that, definitely hit their net income, okay? But at the same time, this wasn't certainly an earnings for Microsoft that you had to say, oh man, that's just so amazing. I mean, I guess if you put it next to Google, it looks amazing, but clearly Wall Street's not buying this, right? And that's why that stock's down 7.7%. Meta. Okay, so first off, Google saved me. Let me be very clear about that. I was going to put $15,000 and buy another $15,000 worth of Meta basically this morning because the stock was down big. It was down over 5% here today. And even myself, I was thinking this has to be around the bottom-ish for Meta. And if it moves down, it'll probably be a slight amount. I think I feel safe putting $15,000. The reason I didn't put $15,000 today is strictly because of Google earnings. I looked over those numbers last night and it was so bad that it made me scared about Meta. Downright scared, because I was like, if Google reported this bad, what's Meta going to do? Because Meta, I always look at it as kind of like the underperformer, overperformer of Google. So in an uptrending market where things are getting better, I kind of look at Meta as being like, it does even better, right? In regards to their numbers, their stock price, everything like that. In a downward moving market, I kind of look at Meta as a bigger risk, right? In terms of their numbers and their stock price, okay? So when Google came in and reported that disaster, and I looked over those numbers, that made me scared. So I didn't even buy Meta despite it being down pretty big going into these earnings, because I was like, oh, Google just reported such a disaster, right? And after hours, the stock is down 17%. Absolutely devastating move for Meta after hours here. This stock is all the way back to pricing that it was back in February of 2016. 2016. To give you some reference, that was right after I started my YouTube channel, which I feel like I've been on YouTube like my whole entire life. It's been so long at this point, okay? I started my YouTube channel in January of 2016. And basically this stock is now back to prices of around there. That is extraordinary, okay? I had lunch. So I took a 10-minute break from everything, and usually if I eat lunch, I try to zone out a little bit. So I took a 10-minute break. I ate the greatest company in the history of making frozen food, Tattooed Chef, okay? Ate a pesto harvest bowl. I come back to my computer 10 minutes later, and the stock's now down almost 20%. It's now down to $104 at this point in time, right? This is insanity, pure insanity. But what I will say about this, does Meta deserve this? It might. This was awful, okay? Look at the numbers. Revenue down 4%. Okay, we can deal with that. Income from operations down 46% year over year. Net income down 52% year over year. Diluted earnings per share down 49% year over year, okay? That is unreal awful. Unreal awful. So bad. I mean, I don't even know what other words to put in other than so bad. Way worse than even some bears were expecting in regards to this. When you see net income down 52%, but that's why when I saw what happened with Google yesterday, and I saw those numbers from Google at a 36% downward move for net income, I got scared. I was like, I'm concerned about Meta here. And sure enough, Meta way did worse, and 52% net income down? Shockingly bad, okay? Shockingly bad. Now, there are a few glimmers of light in this earnings report, okay? The first, by the way, Meta's whole 2022, this is a year for Meta just to forget, okay? This is a year to forget for a lot of stocks, and especially Meta, right? This is something good. This is from Zuckerberg personally, okay? He says the fundamentals are there for a return to stronger revenue growth. So that's good. And also the company's focusing, basically they're going to stop kind of hiring for like the next year and a half, it sounds like. So we shouldn't see a massive new ramp up in, let's call it headcount or expenses in relation to that anytime soon, okay? Reels is taking off for the company in a major way, so that is something that's good for them. We know TikTok has become a major competitor to Instagram, right? And just an overall attention of time, and Instagram Reels is taking off. So that is good news. The issue in the short term is Instagram Reels, yes, it's taking off and it's spreading like a wildfire, but that doesn't mean revenue is helping, right? In terms of monetization, 2023, they'll be able to really start to monetize Instagram Reels. There's always a lag when it comes to Meta on these things. And same thing happened with Instagram Stories back in the day, where they basically took that feature from Snapchat, right? Integrated into Instagram, but you didn't see the monetization show up for several quarters after the product already started taking off. So great, Instagram Reels is taking off like crazy, but you're not going to see it in the monetization numbers in any significant way until 2023. So we have to kind of wait for that right now. So that was kind of the some of the positives in this as well, okay? The other positives in this is family daily active people that are basically using the products is 2.93 billion. That's an increase of 4% year over year. So the whole thing about like, at the end of the day, Facebook, Instagram, WhatsApp, that's what they own. These things continue to grow, and that's amazing in terms of the amount of people using it, right? Family monthly active people up 4% year over year. Facebook daily active users was also an increase of 3%. That's crazy that they can still grow Facebook. Like literally, every time you think Facebook can't grow anymore, somehow they still manage a way to grow it. Facebook monthly active users up 2%. Ad impression and price per ad were down, or family apps increased by 17% year over year. But the average, this is the main part, the average price paid per ad decreased 18% year over year. That's awful. Okay. Now, part of that, it just has nothing to do with Meta, and that's just the operating environment we're in right now, where all these companies are very focused on cost-cutting measures. And when you're very focused on cost-cutting measures, what are you likely to do, right? As a company, well, there's the two avenues you go to first usually. One is people, you start cutting employees. The other is advertising, right? Oh, we're not getting as good of an ROI on ad spend now, so let's cut it, right? And for a lot of companies, they were very focused on growth first, revenue growth first. So even if they lost money in the short term on ad spend, they would still do it just for that top line number. And that's kind of the let's call it the Ponzi scheme or whatever you want to call it, okay, of Silicon Valley is like, you just need to get your revenue up, and then you'd get funding behind that. And they, the VC money would just come behind you, just throwing that money at you, right? And that's obviously slowed down in a substantial way, which means obviously everybody's numbers get hit with this, whether it be a Google, whether it be a Meta, or whether it be any other traditional advertising companies. They all get hit in this environment. All get hit. Okay. Obviously, you spoke about revenue already. Cost of expenses increased 19% year over year. Okay. Capital expenditures came in at $9.52 billion. They repurchased a ton of stock. But here's the deal. They've repurchased like tens of billions of dollars of stock recently. It's called over the last, bit of time here. But the issue is they should have waited, right? Now, of course, who would have known that Meta stock would fall to levels it hasn't seen since 2016, and maybe even it might even fall to levels it hasn't seen since 2015, 2014. Because where's the bottom for Meta stock? At this point in time, technicals are thrown out, fundamentals are thrown out. Like people are like, I have no clue where the bottom is. Even myself, I'm like, it's at such a cheap PE, but at the same time, we don't know what the forward really is going forward. No pun intended there. And so it gets to be a very confusing thing, right? Where everybody's looking at that. But the bottom line is, Meta bought a lot of these shares at like $300 a share. Oh my gosh, I wish they saved every penny, because now they could be buying for $100 a share. Okay. So that's the problem with share buybacks. It's like, usually it's good until you're in a crashing market and you're like, why did we buy it, when the stock was up, 200% from where it's at today or something like that, right? Cash and cash equivalents, marketable securities came in at $41.78 billion. So obviously they're always cash loaded at the company, and it's still a profit machine, just not as much as it was. Long-term debt came in at $9.92 billion. Headcount was 87,000 people. That's a 28% increase year over year. Yeah, when you add your headcount, 28% year over year, and then your revenue goes negative. Now I see why Meta doesn't want to add headcount anytime soon. They don't need to. Bottom line, when your revenues are going down or stagnant, and you have an employee force that you add it to ridiculously, like Meta doesn't need to add employees, in my opinion, for probably 2 years. 2 years. Like, just keep the employees you got, and that's it, okay? That's it as far as that goes. That's my personal opinion on that. Like, it's been insane when it comes to that, right? Now, if you're wondering why did this stock start to sell off even harder as time ticked on here, one is conference call. This is the second part, and it matters in a significant way, okay? We do anticipate Reality Labs, which think of that as Metaverse, operating losses in 2023 will grow significantly. Keyword, significantly year over year. Beyond 2023, we expect the pace of Reality Labs investments such that we can achieve our goal of growing overall company operating income in the long run. Okay, not too exciting there, but this is what everybody's really caught up on, right? Because here's the thing. Let's just call it what it is. Wall Street is completely clueless about the Metaverse. They don't know what's going on there. They have no clue how that's going to shake out. They don't know anything about that, okay? So they don't understand it. They don't understand why Meta's spending so much money on this, and they don't get it. And they're not magically going to get it tomorrow, right? Then when they hear that the losses are going to go up significantly year over year in 2023 for something they're not even behind, they don't even understand it, that causes them to freak out. Absolutely freak out. And that's exactly what we see kind of playing out here with Meta and why that stock is down so massively after hours. The other troubling sign is look at net income. I mean, it just keeps going down and down and down and down and down, right? And in regards to this, obviously we should see a nice tick up in Q4. But the thing is, are we hitting 10 billion? Probably not. Probably not even remotely close to that. What we were at last year, like, 7 billion, maybe 6 billion, 8 billion, something like that might be more in line for Meta's net income. So very, very troubling there. And, to be quite frank, a disaster, right? ARPU, average revenue per user, which is one of the most important metrics when it comes to Meta, right? This was down worldwide. It was down US and Canada, which is the main market. That's bad. Now, to be fair, this isn't Meta's fault. This is overall the economy. This is overall VC money not being there, right? Crypto spending down. All those sorts of things have negatively affected this company in major ways. It's not like they can magically, they can't control this. This is a non-controllable really for Meta at the end of the day. And if you look at Europe, down massively. But we know Europe's in likely a huge recession right now and a horrible environment for them. They've gotten it way worse than the US has gotten it, to be quite frank. So Asia Pacific was up a little bit, but Asia Pacific, look at the numbers. It's so insignificant to the company, right? And you look at rest of the world is up, but look at the ARPU for rest of the world compared to the ARPU of like US and Canada, for instance. It's like night and day. So very, very troubling. Very, very troubling there, okay? Now, this is an issue for Meta and all big tech moving forward is what's the true forward P for these stocks? And this is why I'm even confused at this point in time. If I had to guess, Meta's probably trading at a true forward P of somewhere between 14 and 22 right now. That's a wide gap, man. 14, there's a big difference between paying 14 forward P for a company and 22, right? And so this adds to the confusion of Wall Street right now where they don't know where to value Meta. And that's obviously a significant problem. Now, as of tomorrow, the stock's going to be likely trading for a market cap of $200-something billion, which is insane because it used to be valued at $1 trillion, right? And the stock is cheap. We just don't know how cheap. That's the main issue. We don't know how cheap because we just got a net income that was down 52% year over year. When you get a net income down 52% over year, you don't know how cheap the stock really is and isn't. So that's just a huge problem, right? Now, in regards to this, this goes deeper than just Meta, right? We know obviously the privacy changes and everything that Apple pulled off there. Now you might think Apple was being the good guys there. No, Apple was trying to hurt Google, trying to hurt Meta, trying to hurt all the other companies. Apple cares about Apple at the end of the day, okay? And Mr. Tim Putin, he wants war with everybody, and everybody is going to start coming down on Apple now at this point in time, okay? Here's the deal. This is from Spotify's CEO right here. Apple continues to disadvantage, competitors, and the impact is huge on consumers, app developers, now authors, publishers. Without policymakers taking action, nothing will change. I can't be the only one that sees this, because obviously the Spotify CEO had some, pretty big comments there, and everybody's starting to pick up on this. Now, look at Elon Musk even is picking up on this. Concerning. Why is Elon Musk starting to throw his hat in the ring now? The reason being is Mr. Musk is now buying Twitter. So now, directly, Apple's going to have some sort of influence over Twitter, right? So now things are going to get very interesting because Mr. Musk has one of the biggest microphones in the world. And if Mr. Musk wants to start coming after Apple and start putting the pressure on them, people start listening. People start paying attention. So now Apple is so alienated themselves at this point because of the moves they've made to protect their business, right? Which one of my favorite channels to watch, Mav, he always says the iMob, and it's 100% correct in regards to Apple, right? They're the iMob, and they want to collect as much money as possible from all these companies, and then they'll if you become a competitive threat to them in any way, they're going to try to do everything to limit you, right? And you see that with Spotify, you see that with Meta, you see that with Google, you see that with all these different companies. But the problem is Apple's alienating themselves from all these different services and companies. So, I don't think they realize, or maybe they do realize, they're going to dig themselves their own hole where everybody's going to hate them and will not want to do business with them moving forward, which will hurt this company for the next 10 to 20 years. They're ruining their brand with all these massive companies that are partners of them. They're completely ruining the brand. Now, Tim Cook, he's way up there in age, right? So I don't even know if he really cares about, the way people are going to view Apple in 10, 20 years from now. But I can tell you it's not going to be in a positive light. When they're hurting so many various massive companies, it's not going to be good. I can promise you that. And it will end up being their long-term demise at that company. But Cook will be long gone by that time, okay? So now in relation to this, right, it's like, what can be done here? Well, here's the problem, okay? If politicians start to sell Apple stock, watch out. Because the one thing Apple has going is that politicians love Apple stock. And so it's not in the best interest for politicians to, let's say, hurt Apple in any significant way. Okay. I mean, if you look at this just logically, just go ahead and look at like the most held stocks of politicians. Look at the most held stocks of Congress. The number one stock Congress holds, politicians hold in general, is Apple stock. Okay. It's the biggest. So if that's the biggest stock they hold, well, if they're going to do anything to hurt them, it's not necessarily good for their financial future, right? So if the bigger the microphone gets, and if you get people like Elon Musk on this, right, that are going to wage war now on Apple and come back at Apple for the war that Apple started against these companies, oh boy, okay, because that's when the pressure starts to come on and everybody starts looking at the politicians like, oh, you guys aren't doing anything because you hold all this stock, right? And that starts getting people voted out of office, and that all of a sudden everybody makes a big, huge deal about it. Kind of like nowadays, if you own oil and gas stocks as a politician, like, you know, they run commercials. I see commercials on TV all the time. If I watch college football on a Saturday or something, I see commercials all the time for, you know, like politicians maybe in Nevada or whatever that own oil and gas stocks. And it's almost like a sin if you own oil and gas stocks. And they run these commercials and ads talking about how they own oil and gas. It could become like that for Apple over time if they keep kind of going down this route and the politicians start to be like, oh crap, you know, I don't want to be known as owning Apple because there's so much pressure from the media and from all these big voices that are shining light on the fact that I own Apple stock and we're not doing anything about this, okay? So as long as the politicians continue to hold that stock heavily, you know, Apple can be all right. But as soon as the pressure becomes, you know, gets to be too much, oh boy. And, you know, when it comes to Meta, let's not forget, they have 3 billion people that use their service. 3 billion. So there's interesting things that can happen there. Google and Meta own the internet. I don't think Apple's realized the hole they're digging themselves into, and, you know, just for short-term gain. That's what they've done. And that's going to come back to bite them, okay? Now, I will say this is stupid. Meta's valued less than Home Depot now at this point in time. That doesn't make any sense, okay? And although, you know, Meta's reported dumpster fire for earnings in the short term, like, it's ridiculous how that stock's valued the way it is. I will say that. And I will still be a buyer of that stock, and a much more heavy buyer. It doesn't make any sense. You know, in regards to Home Depot, by the way, a lot of pain still ahead for Home Depot. So, you know, a lot of pain. The only thing that's held up Home Depot this year in 2022 is the fact that you still have so many homes being built, so many apartments being built, so much construction because of the boom that happened in 2020, 2021, right? And all those things are still getting built. As 2023 rolls along, all these homes that are being built are going to dry up. The apartment communities, the condo communities, all that stuff. And you will see that reflected in Home Depot's numbers in an extremely negative way. There's a lot more downside. I'm not personally short Home Depot stock, by the way, but there's a lot more pain ahead in that baby, and Lowe's as well. They've been helped, and people have gotten very confused about thinking like, oh, these companies are going to be okay. No. And already start to look at the appliance numbers from the appliance makers like a Whirlpool. That's going to start to show up in Home Depot's numbers, because where did all these people buy these appliances? Oh, Home Depot, Lowe's, Best Buy, places like that, right? You'll start to see that show up even in the next quarter for Home Depot. Never mind what's coming for 2023 in Home Depot. That's not going to be a pretty situation, okay? Now, the VIX spiking down again here today, down to 27. It's still up massively year to date, obviously. There's still obviously a tremendous amount of volatility in the market, but there's there's less and less kind of going forward now, okay? What's going on here? Well, there's several interesting dynamics. Look at a stock like JP Morgan. This is the most important financial in the world. JP Morgan stock has risen 21% just in the past number of trading days. There's something very telling in that. When you see a stock like JP Morgan moving up like that, right, you're not really, you're starting to move out of a volatility area, which is very interesting how that's working, because that stock really can dictate the overall feeling of the market. And if you see JP Morgan continue to move up, that gives people confidence. That gives the market confidence. That gives the algorithms actually confidence. So that's just a very, very interesting dynamic to see the most important financial in the world continue to move up and move up here. Very intriguing. The dollar dictates where stocks are going in the short term. I'm going to be very clear about that. So if you look at a day like today, right? And people are looking at it like, why wasn't S&P 500 down massively with, Google, a $1 trillion something dollar company, Microsoft closer to a $2 trillion something company? With those stocks down massively, why was the market not tanked, right? The NASDAQ was down 2 something percent, but the S&P 500 held up well. Well, here's the deal. If this baby goes down, stocks go up. It's basically been as simple as that this entire year. You could literally lay out the dollar index versus the NASDAQ, let's say, for instance, and you will see that when the dollar was moving up, stocks were moving down, and vice versa. When the dollar is moving down, stocks are moving up. And it's exactly what we're seeing play out. So if the dollar starts to spike higher again, guess where stocks are going? Down. If the dollar continues to move down and down and down, guess where stocks are going? Up, okay? And so this is just something that, unfortunately, in the short term, this is completely controlling where stocks are going. And like I said, overlay the NASDAQ with this in 2022, and you will see every single time, the dollar goes on a big run, stocks down, 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 okay? Now, I had put out a video, on a few days ago, right? Where I was kind of getting into the stock market insanity that was coming this week. And I said that in that video that I expected Wednesday, Thursday, Friday, and even into Monday to be weekdays for the market in my expectation, okay? And so far we got that to play out certainly today, at least in terms of the NASDAQ, right? And I think the setup is kind of perfect to, kind of tank the market over the next few days. And that will be an interesting situation that happens there, because if you do tank the market over the next few trading days, let's call it the next 3 to 4 trading days, what will emerge there is people saying, oh, see that November, December rally is not coming now. Look at how the market's tanking. Look at these companies' earnings, right? Which will be kind of a trap they'll be set up there. And we will still get the rally, and people will kind of be like, wait, no, I thought we weren't going to get it. The setup is perfect. If you tank it at the end of this month and into the first day of November, it gives the whole negative vibe. And the people that already were bearish got like more momentum, right? And the people that were kind of on the fence start to give up on the possibility of November, December rally. And then you still get that baby. So that'll be interesting to see how that kind of plays out. But, absolutely incredible, in terms of the net incomes of these companies falling, just absolutely massive. And, now on deck next, Apple and Amazon tomorrow after the bell. I'll keep you guys up to date with everything going on. Make sure you check out Moomoo. That will be pinned comment down there. Take advantage of those free stocks while they still got them going on this month. Up to 15 free stocks valued up to $2,000. Much love as always. I'm also putting out some YouTube shorts from time to time. I don't notify you guys when those are coming out. So I purposely click a thing in YouTube that doesn't notify you or put it in your feed. So you have to kind of go find them. But I am starting to put out some of that. Much love as always, and have a great day.